Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, McDonald's soon to roll out its $5 meal deal, but restaurants are already under cost pressure. Franchisee Scott Rodrick.
It's not just wage. We're talking about massive insurance costs that have gone up in the state of California. Obviously, backdoor costs have skyrocketed. Milk, eggs, the cost of beef, chicken.
And the Department of Justice is tackling what it considers Live Nation's monopoly on ticketing. CEO of competitor SeatGeek Jack Groetzinger says he's excited for more competition.
It's a shame because it ultimately means worse experience for fans, higher prices, fewer shows, and a service that doesn't really have an incentive to invest in getting better.
Those stories, plus China's chips push, and a lot about Elon Musk over the long weekend. Funding, AI, and his big pay from Tesla.
I think you're playing with fire at this point. If you're a shareholder, he could go to a beach and do nothing.
It's Tuesday, May 28th, and Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Andrew Ross Sorkin. Joe is off today. And guess what?
What's that?
It's Tuesday. Monday's already gone. Missed the toughest entry day of the week. 4-day week.
No, I
Something to
think
look forward to.
Tuesdays are tough.
No.
Elon Musk's artificial intelligence startup xAI raising $6 billion in a Series B funding round that values the company up to $24 billion. It's up from $18 billion. Musk launched that company just last November after withdrawing support from OpenAI, which he had initially backed. Now, the funding round backed by Andreessen Horowitz, Sequoia Capital, Prince Al Walid bin Talal, and Kingdom Holdings, among others. Separately, the information reporting that Musk recently told investors that xAI is planning to build a supercomputer to power the next version of its AI chatbot Grok. The report saying the company could partner with Oracle to develop that computer, which could be running by the fall of 2025. And they've talked about a sort of a gigafactory or a giga supercomputer. So we'll see what that ultimately looks like, if it looks like what it looks like. This, to me, is the more important story, an interesting one. In other news, proxy advisory firm Glass Lewis urging shareholders to reject a proposed $56 billion pay package for CEO Elon Musk. The report cites the, quote, excessive size of the pay deal and the dilutive effect when it is exercised. The pay package initially crafted in 2018, but a Delaware judge voided it earlier this year. Glass Lewis saying that since 2018, Musk has taken on a slate of time-consuming products unrelated to Tesla, including his high profile of purchase of Twitter. The advisory firm also recommending that shareholders vote against the proposal to move Tesla's state of incorporation to Texas from Delaware, and then also to vote against the re-election of board member Kimball Musk, Elon's brother. What do you think?
I think this is a tricky one. If he doesn't get the pay package, do they actually lose Elon Musk? Does he say, forget it, I'm checking out and moving to
You
xAI?
were against the pay package originally.
Yeah, but I was impressed that he actually, I thought it was a crazy pay package, but I thought there's no way he could actually hit any of the milestones. He hit every one of them.
Right.
Which, okay, if you were a shareholder and you've been a long-term shareholder, you probably feel very grateful to him, despite the fact that you're seeing stock come down now and you're seeing the sales numbers come down too. I don't know.
So there's two pieces of this. One is it's no longer a $55 billion pay package.
I know. I'm $45 billion.
And I think people sort of I think we're probably right now probably 45, maybe
45 to 46. I think were the latest numbers.
I was going to say I think it might even be down to 43. But irrespective of that, the point is I think you're playing with fire at this point. If you're a shareholder.
If you claw back something that he was already given back in 2018.
I think you're playing with fire because I think that this is a guy who, as I said, I think back in 2018, he could go to a beach and do nothing if he really wanted to. Even though he owns a lot of Tesla, he's got SpaceX. He's got a lot of other things to do. He's a busy guy.
He'd go to xAI and spend his time there.
And so I know it's very easy for Glass. It's very easy for Glass Lewis or for somebody to sit around if you don't have a stake in this thing and say, oh, I don't want to pay him. It's okay. But I think if you don't pay, then the chances. I just think that you're raising the risk chance. And if you say no, what do you think happens?
Well, and I think doing it this many years
gonna...
later is crazy. Like when somebody's been working under the assumption that this
there's
is
the whole
going to be
contract law thing. No, I agree with the law, but the judges in Delaware don't agree with me, so that's a different issue.
I just think it's a bizarre thing to claw back this much later. But I think for the shareholders,
the risk that the risk on the table is that he really just says, okay, screw this whole thing.
Right,
Good
and Ron Barron, who's a major Tesla investor, has repeatedly said over the years that the biggest thing he worries about is the key man issue, that this company is not going to be all that valuable without Elon Musk there. So,
well, that may be.
Even having, and to me, it's just I have a hard time clawing back something that many years later. It just seems like because it turns out that it's more valuable than we realized it was, because he hit all of these milestones. I mean, that just seems like a little bit of a ridiculous situation. If it was something the shareholders were really angry about, they should have brought this proposal a long time ago and voted it and checked things out. But I think at the time, no one actually thought he would hit, or very few people thought he would hit all of those milestones.
And just to be clear, the only reason why this is on the table even now, and some people think that this is illegal, by the way, that the actual vote won't matter. There is a view that the vote won't matter at all.
Because of contract law?
Because of the court, and the court may view that the contract is void to begin with, and that this would have to be structured the vote would have to be structured in a very different way.
I don't know. This was such a strange one because it's so many years. He actually hit all these milestones. I have a hard time understanding how you don't give that to him when he's already done the work.
Right. Let's talk about some meme stocks this morning because GameStop shares, they are sharply higher this after Friday's close. The company said it made more than $933 million by selling 45 million shares. That works out to a sale price of roughly $20.74 per share. Stock had been trading below $11 at the start of May. Theater chain AMC also announcing last week that it completed a $250 million share sale, and that stock up as well. I would have thought that it would have been better for an AMC because they have enormous amounts of debt. So any kind of debt that they can pay off, even if they dilute their shareholders, I mean, is not great. I mean, is better.
Rough, though, right?
But I was going to say for GameStop, different story.
Yeah.
So I'm unclear why those shares are rising the way they are.
You could probably look back at Roaring Kitty for part of this, for sitting up and taking notice, for getting...
Sure, but if you raise all that, I mean, but that's just a straight dilution story.
Yeah. China raising $48 billion in funding for a new chip fund as it looks to ramp up competition with the United States. Eunice Yoon joins us right now from Beijing. And Eunice, this is a big issue. Semiconductors are kind of looked at as the new arms race, the weapons in the new arms race.
Absolutely. Chips were on the mind of Chinese Premier Li Qiang, as well as the rest of the leadership, but he specifically was urging Samsung, a major chip player, to invest in China. This is as the Chinese look to maintain a connection with global semiconductor supply chains. Now, he was meeting with the leaders of Japan as well as South Korea in Seoul this weekend in a meeting that was deemed the first three-way talks in 4 years. Now, he called for an end to protectionism as well as a decoupling of supply chains. Now, this visit comes also as Treasury Secretary Janet Yellen urged the G7 to create a united front against Chinese overcapacity. The G7 finance chiefs in the meeting expressed concerns about China's, quote, non-market policies. Now, highlighting that, China announced an expansion to its main government-backed fund that supports the chip industry. This is called the National Integrated Circuit Industry Investment Fund, known as the Big Fund. Now, the authorities in China are planning another $48 billion investment. This would roughly double the size of the fund. Now, it's also important to note that in the meeting, the trilateral meeting with two of the most powerful leaders in the region, President Xi Jinping did not show up. And only a week ago, he had met with the president of Russia, Vladimir Putin, in a sign of changing priorities when it comes to foreign policy for Beijing. Guys?
Hey, Eunice, China's been working at this for a while. They had billions of dollars, tens of billions of dollars that they'd spent in the decade leading up to this. And as recently as last summer, I remember reading stories about how frustrated they were that those tens of billions of dollars in investments weren't paying off in the way that they had anticipated in terms of new developments in semiconductors. Why would this be different?
Yeah, well, absolutely. There have been several people within the chip industry who've told me that the Chinese are very far behind when it comes to chips. And so because of that, there is a frustration at the idea of being able to create a self-reliant chip industry, but not actually quite making it. It's a big question mark as to whether or not this extra $48 billion would really make much of a difference in terms of the size. It's huge, but it's difficult to say just how effective it is. And in terms of the announcement, there wasn't a whole lot of detail in the investment plan other than other government authorities such as Shanghai or Shenzhen putting in.
It's a little interesting to hear the Chinese preaching about decoupling the supply chain, because when the United States has brought that up, it's been a really big sore point.
Right. So the U.S. often will say that the Chinese had started the decoupling long ago, especially when it comes to, say, for example, the internet, that Facebook or that Twitter or X aren't allowed here anymore or at any time. But at the same time, the Chinese perspective has always been that the U.S. is the one that had started this decoupling. And so all of the state media reaction, especially from Treasury Secretary Yellen's comments about Chinese overcapacity, has been just to really push back on the idea that the Chinese are in the wrong here.
Eunice, thanks a lot.
Cheese will be next.
Coming up, breaking up is never easy. But that's what the Department of Justice wants to do to Live Nation and Ticketmaster for alleged monopoly practices.
We've had a front row seat to a lot of that illegal, anti-competitive behavior.
We'll speak with Jack Groetzinger, CEO of ticketing platform SeatGeek, about combating sky-high ticket prices at live events. Squawk Pod will be right back. Welcome back to Squawk Pod, today with Becky Quick and Andrew Ross Sorkin.
The Justice Department suing Ticketmaster owner Live Nation, saying that the company maintains a monopoly in the industry, controlling roughly 80% of major venues' ticketing. Joining us right now for more on that and demand as we head into the summer concert series, we've got Jack Groetzinger. He's the CEO of SeatGeek. And Jack, thanks a lot for being here.
Thanks for having me.
So I was just explaining to you how I look at SeatGeek and how great it has made things for me in terms of being able to buy tickets and always find a ticket. What I think SeatGeek and some of the other companies have done, though, is boost ticket prices to some extent because ticket scalpers now have a way to do it. And I'm saying this as somebody who both buys and sells tickets on your site. Explain to me what's happening right now in terms of the Justice Department looking at Ticketmaster and why you think that that is monopolistic behavior. What has Ticketmaster done? Yeah,
we've had a front row seat to a lot of that illegal, anti-competitive behavior, and a lot of that is outlined in the DOJ filing.
Yeah, but what do they actually do? Because I hear this, and I have to say, as somebody who looks at ticket prices and thinks they're too high, I don't have a whole lot of empathy for Ticketmaster on this. But what specifically, as a competitor, have you seen that they do that makes it not just tough competition, but illegal competition?
DOJ outlines a lot of that. One specific example is they illegally tie content, meaning shows, to the company that is doing ticketing for a venue. So they're under a consent decree that prohibits that, but that has not stopped them from doing that. And it's a shame because it ultimately means worse experience for fans, higher prices, fewer shows, and a service that doesn't really have an incentive to invest in getting better. Because if they know that they're going to be able to run their business even if they go down or have higher prices, you don't see the industry getting better. And that's why we're excited for more competition. I believe in free markets. I believe more people competing to build better stuff means better outcomes for fans, artists, teams, really everyone in the ecosystem, except for the monopolists.
Ticketmaster has said that their market share has gone down since 2010. Is that the case? You guys started in 2009.
Not surprised they're saying that. Per the DOJ, they have over 80% market share. Until we entered the primary business, which was in 2017, they had almost every major venue in the US. They just weren't losing deals. We've been fortunate to now have dozens of major venues.
How did you do that? Because I remember that happening. I remember all of a sudden it wasn't just Ticketmaster on the scene. And when I was looking for tickets, I could price shop.
We focused on technology and said we are a technology company that happens to be focused on live events. And if we can build something not just a little bit better, but a lot better, then people will notice and switch. And we've been able to get many venues to see that and switch over and give a better experience to their fans. But we've been doing that in a environment that is fundamentally uncompetitive.
Well, I was going to say that sounds like an argument for why maybe they shouldn't be broken up. If you guys have been able to make this progress just because you're better and you're investing more in artificial intelligence, more in technology on that side, what would be different if the Justice Department were to break them up other than to weaken a competitor?
Many companies have tried. I'd love to see more competition beyond just SeatGeek. I'd love for us to have to prove ourselves against many companies out there.
Can you just describe, though, the margin that you think that they're taking, the margin that you're taking, and what the difference would be if this was broken up?
The thing they do is, they have Ticketmaster, which sells tickets, but also they own venues.
Right.
They are the largest promoter. They manage artists. So insofar as they are pushing up fees, those fees are then taken across many different parts of the value
I guess
chain.
and I tried to ask this question of the DOJ last week. Let's say there's a ticket price that's going for, I don't know, $200, $300, $500. Make it a Taylor Swift ticket and we can go, $1,000 plus dollars. What is the margin? What is the margin that you would be taking? Are you taking a lower margin than they're taking?
They don't break that out in their P&L, but we look at our prices. We are at or below the rest of the market. And we found that.
But I think the big question is the consumer harm, right? We're all sitting around going, price is too high. How much lower would the prices be if there was more competition? Nobody seems to be able to answer this question, and part of the reason I'm even asking it is because I actually fear that the prices are actually at a market price. You may disagree, and that's what I'm hoping you're going to say.
I think I do disagree. I think prices go down. Of course, the specific amount is going to vary by event. I think the other part that's really important is the actual service, the product that fans get will get a lot better because you will no longer be able to just exist and assume that you're going to get business. We want a dynamic market where there's tons of folks out there competing.
Here's my concern. Echoing what Andrew's saying, I think the high prices in the U.S. market in part are because of services like yours, services like Ticketmaster, where, again, you can sell tickets if you can get your hands on these things and lock the tickets up. It's almost scalping with a technology assistant to do that. In the United States, we have a lot of money and people will pay up for those things. But there's a reason that ticket prices here are so much more expensive that people are flying to Europe to see Taylor Swift because it's cheaper with the airfare and the hotel included than trying to get a ticket here at Giant Stadium. I mean, and that is partially because you all have made it easier for people who get the tickets with no intention of ever going to turn around and resell them.
Europe is an interesting counterexample where we have meaningful business in Europe. We ticket about half of the English Premier League teams, and you see really different market outcomes. You see lower fees, you see lower prices. Fundamental reason is that there's multiple ticketing companies that are able to sell tickets for a given event. So you have this more competitive environment, and it results in really better
because
outcomes.
it's lower fees?
Lower fees.
But how much? What are we talking about? Is the fee 5% of the ticket value? Is it 10% of the ticket value? I'm saying if you take out all the fees, we remove every fee, then we shouldn't even be having this conversation.
Sometimes fees here are 50, 80, even 100% if you're looking at lower price tickets on some of these things. What is it there?
In Europe, yeah, you see lower fees. You see more companies competing on fees, and I think that's what we're missing here is the fact that
competition on fees.
Exactly.
So what's the percentage of are your margins in Europe a lot lower?
We don't disclose our margins in Europe. They're competitive with the rest of the market there, and you see overall lower prices in Europe.
But just tell me that if you told me that your margins are higher in Europe than they are in America, then we shouldn't even be having this conversation. I'm hoping you're going to say my margins are significantly lower in Europe than they are here, and that's because of competition. If you can't say that, then we can't. You see what I'm
Yeah, totally. I see, we're not able to disclose our margins on a country basis,
right.
But to get to your point.
Europe, broadly, the continent.
Yeah, most of our business is in the UK, in Europe, so it's a bit of one and the same. But I think what you're asking is, ultimately, does it matter? And if you just survey fans in Europe, how they feel about the ticketing companies that they use there, you get much happier fans. You have more artists who are able to put on shows in more places. It's a robust, more dynamic environment, and that's why it's so exciting what the DOJ is doing, because we will hopefully have that here in the U.S.
Jack,
I think
thanks
that's what
a lot
fans
for
deserve.
coming in. Jack Groetzinger from SeatGeek. We appreciate it.
Thanks for having me.
Next on Squawk Pod, McDonald's will soon roll out a $5 value meal. It's aimed at relieving inflation-weary consumers, but franchisees are inflation-weary too.
We've certainly seen guest count pressure in terms of fewer customers coming to restaurants in general. And those that do come into the restaurants are spending less money than they were spending before.
We speak to Scott Rodrick, a California franchisee who says the plan is just part of McDonald's longtime value promise to consumers. You're listening to Squawk Pod from CNBC.
You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Becky Quick. Joe is off today. I hope you all had a great long weekend.
McDonald's new $5 value meal is set to hit menus this summer, aiming to lure back customers who have been deterred by rising fast food prices. However, some of the franchise owners are concerned about the impact on their profits and are calling for more company support. Joining us right now is Scott Rodrick. He's a McDonald's franchisee. He's owning and operating 18 McDonald's franchises in Northern California. And Scott, it's good to see you again. I guess it's been about 2 months since we last spoke with you.
It's been about 2 months since this impact of the new California $20 wage on April 1st, and it has been quite a roller coaster. We've been monitoring this impact of inflation on my customer, which obviously is the most clear and present concern that I have as a franchisee today.
What has it meant to your profits over the last couple of months?
Well, this unprecedented and extraordinary historical wage impact, 25% overnight, targeted only to 15,000 restaurants in the state of California, it has impacted margins. And at this point, instead of lamenting about ill-timed and poorly conceived laws passed by the state legislature, franchisees like myself are focusing on trying to increase market share. Obviously, you mentioned in the lead into the story, we are about to launch this summer a revamp of the McDonald's meal deal at $5. The competitive space is getting extraordinarily heated up, and McDonald's my restaurants plan to be at the forefront of trying to bring some relief to a inflation impacted customer.
So you're in favor of this plan. I want to use it against the backdrop because I think what you're dealing with in California is probably more severe than just about any franchisee anywhere at this point, although everybody's dealing with the inflationary impact of higher labor and costs that go into making all of the things that you're there too. McDonald's is using this as a national marketing campaign to try and bring customers back into the stores. You have seen guest count face a little pressure. What do you think about the plan overall?
Well, we've certainly seen guest count pressure in terms of fewer customers coming to restaurants in general. And those that do come into the restaurants are spending less money than they were spending before. So taking a page out of our long storied history in the world of McDonald's, we've always been a leader in value. And sometimes as a franchisee like myself, you have got to invest in margin. And so we're going to do that precisely this summer with the launch of not only the $5 meal deal, but a revamping of the national value platform. There are many, many franchisees across the country in their local advertising co-ops that have executed value in terms of beverage, in terms of food-led value. And the national value communication piece has gotten a little away from us of late. And so we collectively, as a group of McDonald's franchisees and the brand, have decided to come together and launch a very substantive, impactful, inflation-busting value campaign that launches again in literally about four weeks. The margin pressure is extraordinary. It's not just wage. We're talking about massive insurance costs that have gone up in the state of California, if you can get it. Government regulations that sometimes choke the lifeblood and oxygen on a small business entrepreneurship. Obviously, backdoor costs have skyrocketed: milk, eggs, the cost of beef, chicken. But all of those things combined, I can either just lament the impact to the cost of doing business, or I can get aggressive about growing market share, building my business. That entrepreneurial zest, that drive, is what I intend to do with my fellow franchisees in California to fight this horrible legislation and the impact that it's had on our business and our margins.
It's just a really interesting perspective. This has been colored as something that was pretty a big fight between the franchisees, but it sounds like you are behind it 100%.
Well, McDonald's is a big family, and it has been around for 60 years. It's prided its success on this three-legged stool between suppliers, the brand, and of course, the vital franchisees. And so in every big family, you have disagreements, but this debate, this internal debate, has yielded a great result for the brand. And that is us being in the forefront of value. And by the way, value is not just about price. It's a combination of price plus experience. And so we're doing everything we can on top of price to drive things like convenience, and that means getting more aggressive in the digital channel. You've seen over the last decade how aggressive we've become in delivery and in mobile order and pay. And so we're going to continue to evolve, and we're going to continue to be on the forefront against our competitor to grab market share whenever and however we can.
Scott Rodrick, thank you very much for your time today, Scott.
Thank you, Becky.
That's our podcast for today. Thank you for listening. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin, and you can catch them live every weekday morning on CNBC starting at 6 a.m. Eastern. You can always get the smartest takes and analysis from our TV show right into your ears if you follow us here on Squawk Pod, wherever you get your podcasts. Have a great day, and we'll meet you back here tomorrow.
We are clear. Thanks, guys.